Welcome back to the channel. Today, we are breaking down the latest earnings results and future projections for Palo Alto Networks, a major leader in the cybersecurity space. With recent market volatility and shifting analyst targets, there is a lot for PANW investors to digest. Before we dive into the specific charts and data tables, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get into the report. We begin with a look at Palo Alto Networks' current market performance on the NASDAQ. As of the latest reporting session, PANW is trading at $152.61, showing a slight upward tick of 0.18%. However, this follows a significant previous session drop of over 6%. The volume is high, with over 26 million shares traded, reflecting intense market interest. Looking at the 52-week range, the stock has moved between a low of $144 and a high of $223. The current price level puts the stock near the lower end of its yearly range, which is a critical point of interest for both bulls and bears. This overview sets the stage for our analysis of the underlying financials. Understanding where the stock currently sits relative to its yearly highs and lows is essential as we evaluate the earnings data that will likely drive the next major trend in the stock's valuation. Turning to the earnings per share chart, we see a track record of consistent performance and recent outperformance. The dark blue bars represent estimated EPS, while the light blue bars show actual reported figures. Palo Alto Networks has delivered definitive beat results in the second and fourth quarters of 2025 and most recently in the first quarter of 2026. For the January 2026 quarter, the reported EPS came in at 0.68, significantly beating the 0.49 estimate. This trend of exceeding expectations is a powerful signal of operational efficiency and strong demand for the company's cybersecurity platforms. Looking ahead into the remainder of 2026 and early 2027, analysts have established a growth trajectory, with estimates rising from 0.4 in the second quarter toward 0.6 in the third. The visual consistency of these beats and the rising estimates point toward a robust financial outlook despite the recent price volatility we saw in the market overview. The earnings surprise table quantifies exactly how Palo Alto Networks has performed relative to analyst expectations over the last year. For the most recent quarter ending January 2026, the reported EPS of 0.68 shattered the consensus forecast of 0.49, resulting in a massive 38.78% positive surprise. This is a significant jump compared to the October 2025 quarter, which saw a modest 6% surprise. Interestingly, the July 2025 quarter actually reported a negative 16% surprise, which broke an earlier winning streak. The year began with a 4.88% surprise in April. These figures highlight the beat and raise potential of the company, but also the occasional variance that can catch the market off guard. The massive beat in January is the headline data point here, as it suggests that the company is currently in a high-performance phase that is far outstripping what professional analysts had previously modeled for the start of the 2026 fiscal year. Looking ahead to the quarterly earnings forecast, we see the specific targets analysts have established for the upcoming quarters in 2026 and 2027. For the quarter ending April 2026, the consensus EPS forecast stands at 0.47 based on 13 analyst estimates. Within this group, sentiment is slightly cautious, with one downward revision in the last 4 weeks and 0 upward moves. However, for the July quarter, the consensus rises to 0.6, supported by one upward revision. As we move into fiscal 2027, the consensus continues to climb, reaching 0.58 by April 2027. The high EPS forecasts across these periods are notably higher, with some analysts calling for as much as 0.67 in early 2027. This data reflects a market that is largely holding steady while waiting for more evidence of growth. The relative lack of revision activity across most quarters suggests that analysts are currently satisfied with their models following the recent January beat. The long-term yearly earnings forecast paints a picture of steady, multi-year growth for Palo Alto Networks. For the fiscal year ending July 2026, 19 analysts have converged on a consensus EPS of 2.07. Looking further out, the growth is projected to continue its upward march, 2.4 for 2027 and 2.9 for 2028. This represents a nearly 50% increase in annual earnings per share over the next 3 fiscal years. While the number of analysts naturally decreases for the later years, the direction of the consensus remains firmly bullish. The high-end estimate for 2027 of $2.75 suggests that some analysts see significant potential for the company to scale its profitability even faster than the current consensus indicates. This yearly data is vital for long-term investors, as it shows that Wall Street expects Palo Alto Networks to consistently compound its earnings as cybersecurity becomes an increasingly critical component of global enterprise infrastructure and spend. The changing consensus chart visually tracks the stability of analyst expectations over the past month. We can see the forecast for both the full fiscal year end July 2026 and the upcoming quarter in April 2026. Comparing the 1 month ago data to 1 week ago and current, the bars remain remarkably flat. This visual consistency confirms that recent market developments and the latest earnings data have been integrated into analyst models without triggering any major shifts in the consensus targets. While there is no positive momentum driving the bars higher at the moment, there is also an absence of significant negative momentum pulling them down. This stability indicates a period of equilibrium where the market is currently satisfied with the existing projections. For investors, this plateau in the consensus suggests that the next major price move will likely depend on whether the company can deliver another significant surprise in the upcoming April report to force these bars into a new upward trend. The estimate momentum text summary provides a precise breakdown of these sentiment shifts. For the fiscal quarter ending April 2026, the consensus EPS forecast has remained perfectly unchanged at 0.47 over both the past week and the past month, with none of the analysts raising or lowering their forecasts. However, for the full fiscal year ending July 2026, there has been a very slight downward adjustment, with the consensus forecast moving from 2.08 to 2.07. The summary notes that one analyst has lowered their forecast during the period. While this fractional change is minor, estimate momentum is often considered a leading indicator for stock performance. This current 0 to slightly negative momentum state suggests a more cautious approach from the professional community as they balance the massive January beat against broader tech spending concerns. These minor adjustments reflect the evolving professional opinion as analysts refine their long-term models following the recent quarter's results. Finally, we look at the raw tally of the number of estimates changed to confirm the breadth of this recent sentiment. The table shows a very focused and narrow shift in analyst activity. For the April 2026 quarter, we see 1 downward revision and 0 upward moves. This pattern is mirrored for the full 2026 fiscal year, which also shows 1 downward revision and 0 upward moves. This single downward adjustment in each category represents a very small minority of the total analyst pool, as the vast majority of the 16 to 19 analysts covering the stock have chosen to hold their targets steady. The lack of any upward revisions during this period suggests that the beat and raise excitement from the January report has temporarily stabilized. This concentration of zeros across most categories indicates a firm, if slightly cautious, consensus in the financial community. For investors, this tally serves as a final confirmation that the market is in a wait-and-see mode as we look toward the 2026 fiscal year performance. In conclusion, Palo Alto Networks continues to demonstrate strong fundamental execution, highlighted by the massive EPS beat in the most recent quarter. While analyst sentiment has temporarily plateaued with minor downward revisions, the long-term forecast remains highly bullish, with significant growth projected through 2028. The company is positioned at the lower end of its yearly range, making this a critical junction for investors. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on PANW and the broader tech markets. We'll see you in the next analysis.